Good afternoon, everybody. Um, this is Donald Kaisamber again with Kaisamber and Associates LLC, DBA Kaisamber Agency. This is just a quick overview in discussing commissions and payments with AIG and Phoenix. Okay, just 1 second, guys. I'm gonna have to get a Word document upload. Okay, now we are seeing that. I just recently put this together, but here we go. So, as you can see, let's say we have an agent. Let me get my pen. Okay, so here we're going to do AIG. So we write it here, AIG. Actually, let me just thank God to my, okay, AIG commissions. Okay, so we have an agent. Agent are at 50% commissions. Now, if you are in the 70% one with the agency, we put you at 50 because this is guaranteed issued. So an agent is at 50% commission, and an agent wrote a client for $100 a month. That should be your average. Okay, so at $100 a month, we have a client there. Now we're going to do the math. So let's go to home. Let's see. All right. So what do we do next? Go over here, and we take that $1,200. Man, wish I could write it properly. So we take $1,200, do it with my hand, and now we want to calculate what is your advance at 50% commission. So we take $1,200, and we're going to multiply that the annual premium by your commissions, which is 50%. Okay, so let me grab my calculator. So I have my calculator here. We take $1,200, which from an average of commissions, most cases. So we take 1,200, we multiply that by 50, which is 50%. So what do we get? We get $600. So we put it here, $600. Okay. Now you are writing a guaranteed issued policy, AIG guaranteed issued policy. And for some reason, let's say hypothetically you're on a Schedule Q. AIG call it Schedule Q sometimes. So Schedule Q. All right. So this is how you get paid. So they would take that $600, and they will advance you 50% annualization of this amount. Okay. And that brings it down to $300. Okay. Now they have what they call annualization fee. Okay. Annualization fee. And that fee is 2.5%. 2.5% of this amount. Okay, so let me erase that again. Now, when you take $300, which is now your annualization, and you multiply that by 2.5%, which is your annualization fee, you end up with $292.50. Okay. If everything is well, you haven't had any vector, or nothing showed up on your radar, or the company trusts you, they will keep you at annualized premium. But this is I'm sure that's why we all do insurance, but we must also know that this is an added benefit, and they should not take it from us, but sometimes they want to evaluate it from time to time. So $292.50 is what you will get deposited as your advance. Now, what is the beauty of what we do? Okay, the beauty of what we do is called residual. Residual income. RISIDUAL. Residual income. So what happened? Your total advance should have been $600, right? So $600 is what you should have received. Okay. Company advanced you $292.50. It's guaranteed issue. They don't know whether the client's going to make it or not. Now the rest, $300, goes into your residual bank. On the 7th, 8th, 9th, let me don't say 7th, 8th, 9th, 10th month, you have the option of what they call residual income. Now, as the client continues to pay, they haven't canceled, they don't have any issue, they didn't decline. I mean, nothing happened with the client, everything is fine. You will have a residual income. And let's say they advance you $292. Come the 8th month, the company may just give you, let's say, $50 every month for that case of $100. That's your residual income. Now, the good thing to make money, you keep writing. That's why I keep telling you guys, do not stop working. If things get hard, you need to do something else, but don't stop doing insurance. Don't stop paying your membership fees either. Keep plugging it in, adjusting yourself, and build your residual income. So if you get $50 and you times that, let's say you've written 100 policy, and your residual income is $50 a month. So if you take $50 from your residual income and you want to add that, so you take $50 times 100 policies. Guess what, guys? Bingo. Now, you've built your business. You've been doing it for 5 years. You've written 100 policy, or you've been doing it for 1 year. You've written 100 policy, or you've been doing it for 6 months. You've written 100 policy. Bam. There you go. You earned $5,000 residual income in your bank account. This is why we do this. But that's explaining AIG's format. All right. So let's go to Phoenix. So this is Phoenix Life. I am the queen of my agents, so they all tend to accept, you don't have an issue with your finances, but, you should get, I will give you access to my contacts. So, Phoenix, let's say you write a Phoenix policy, and that payment for that Phoenix policy, the client is paying $200 a month. Okay. Now you take $200 and you multiply it by 12. That gives you 2,400. This is the AP. This is what we call annual premium. Okay. So you take $2,400. Okay. So now you take $2,400 and you multiply that by your commission percent. You are at 70% commission. Okay. So now we take $2,400. We're trying to find out how much you made. Now, when you sold this policy, you made $1,680. Okay. Now, out of that $1,680, this is how much you're going to earn eventually. If the business becomes good, the business is a success. It's $1,680. Now, we want to see how much you're going to get advanced. So we take $1,680 and we multiply that by 75%. Okay, 75% at any given moment, it equals 9 months. I believe that they're both the same. Most companies will look at 75% of 9 months. So they would take, you take 1,680, so you take $1,680 and you times that by 75%. That gives you $1,260. Okay, out of your case of out of your commissions that you've earned at 70%, totaling 1,680, you have a total of 1,260. So let me do that again. Your total commissions for the $2,400 annual premium brings you at 70%, equals to $1,680. Out of your $1,680, you get advanced 9 months. Out of 9 months, the company issue you a check of $1,260. That's your advance commission. Now, what do we have here? So if you want to see how much you get advanced is $1,260, how much you earned is $1,680. There is a difference of $1,680. Let's do the difference. $1,680 minus $1,260. So we do $1,680 minus $1,260. $420. Samba agency has not started keeping your residual income yet. Okay. Samba agency has not started keeping your residual agency. We haven't started keeping up your residual income. You have a $400, $420 or so residual income. Okay. That income will come 9 months after. 9 months after. Okay. It is a great thing. It is a great thing to create and build wealth. And with that said, you're gonna take time. You're gonna need time. This is just a quick video showing you guys how you get paid from Phoenix and AIG and why we consider the insurance business lucrative. Okay, great job. Thank you.